Hi, everyone. It's Kim Crumpus, and I'm the founder of the PriceActionTradersInstitute.com. I want to welcome you if you're a first-time visitor to my YouTube channel, and welcome back if you're not a first-time visitor. Today, I want to do a little something different. Usually, I show you live trades, but today, I thought I want to let you in on part of a webinar that I just did on October 19th, and it was some of the best of Mark Douglas. And if you don't know who Mark Douglas is, the webinar goes into it. And it's just a sample, about an 8-minute long video of what I cover in some of our weekly webinars with members. So I invite you to come in, sit down, and enjoy this next segment. Hey everyone, welcome to the Wednesday webinar. It's straight up 10 a.m. here in California, 1 p.m. in New York. Let's go ahead and get started. But first, just make sure that you can actually see my desktop and hear me clearly. All good, Ed says. Hey, Ed. Thank you. All right, perfect. Well, today was a bust in the markets in the New York session. There was not really anything didn't play out. So it was unfortunate, but that's what happens. I mean, not every day can be a big day. Like Monday was a huge day. Tuesday was lame, and today was. So I'm slowly chipping away at my gains I made on Monday, but I do have a line in the sand for myself. So I didn't go over that today and ended up with a 44 pip loss today. We'll see what tomorrow brings. Tomorrow we do have US dollar news 30 minutes before the planning session, and that is the Philly Fed Manufacturing Index. We'll see if that is a tradable event. Typically it hasn't been, but who knows? I don't know anything. I don't have a crystal ball. All right, so let's go ahead and get started. Today I want to do a little mindset work, and I think we can all benefit. I can benefit from it. I always do. It's an ongoing process. It never stops because the markets never stop, and neither do our minds. So I want to do kind of like the best of Mark Douglas, some of his really good quotes, and feel free to chime in with any comments you have while we're doing this. Hi, Jim. Just saw your note there. All right, so let's go ahead and get started. But before we do, some of you may not know who Mark Douglas is, so I just want to give you a brief introduction. When it comes to traders' mindset, trading psychology, Mark Douglas really set the gold standard in understanding how our success as traders depends on our mindset or our psychology. They're kind of interchangeable. He's known for his 2 books, Trading in the Zone and The Disciplined Trader. The Disciplined Trader was his first book. It was published in 1990. And his second book was published 10 years later, and that was published in 2000. He was the first trader, who was also an author, that showed traders how their mindset will affect your trading performance. And I have to say, after me trading for 22 years, I still refer to his books for guidance, wisdom, and the periodic reminder or insight. So I think today's webinar is part of me wanting to refresh my own skills. Like I said, it's ongoing. What are the highlights I want to focus on? Is your success as a trader predictable? How to acquire the right mental structure according to Mark Douglas. Talk about this concept that he's really well known for about consistency is all in your mind. We'll look at his comments or quotes around his statement, a hard, cold truth about trading. And then we'll end with his 5 fundamental truths about trading. And of course, like I said, your questions or comments or ideas are I'm very open to those. So please feel free to chime in as I'm talking. Just before I begin, though, I just want to remind everyone, and then for the new people, we've shortened the webinars so that people don't have these long, drawn-out webinars to listen to, and we touch on something important and hopefully keep it under 30 minutes. So, first one, do any of these predict your success or failure as a trader? Intelligence, so you're really smart. You know you're smart. Most traders or people that get into trading are smart, work hard. Does working hard mean you'll be a good trader? You'll succeed? Most of us work hard. You do better chart analysis than the guy across the street or in your chat room or wherever you go, or even me. You have a professional designation. You have a license, let's say, like you're an engineer, a pilot, a doctor, a lawyer, a CPA like me, a consultant, a realtor, a developer. Does that mean you're going to succeed at trading? Or what if you love to grill? I just threw that in. Do any of these mean that you're going to be successful? No. In fact, it's been shown that the more educated a person is, the less likely they'll be successful. And they have a few more hurdles to overcome. I'm going to use me as an example. I have a master's in economics. I'm a CPA. And so when I first started trading Forex, I thought, ooh, that red news that just came out, the dollar should do this, or the euro should do that, or the pound should do this, or the Aussie should do this or that. Because I was trying to interpret the market using my background and my training. And it was like one of the biggest faux pas I could have ever made. It held me back. I thought I was smarter than the damn market. So using that served me in no useful way. And like I said, it held me back. And it wasn't until someone pointed it out to me and said, "What the heck are you trying to do? Do you really believe, Kim, that just because you have an economic degree and you're a CPA, that you should know what the dollar is going to do, what a market is going to do, any market?" Like, wow, that's arrogant. And the truth was, no, nobody knows what the market's going to do. Nobody knows what a trade's going to do, as we'll hear from Mark Douglas. But there are some facts known about successful traders that are, I think, important for us to know what those are. The first one has to do with confidence and trust. They know what needs to be done from a risk management standpoint. Like, they really take risk management seriously. They also know what criteria must be in order for them to open a trade. So they just don't get all crazy and throw fate to the wind, and they let their risk management fall by the wayside, or they don't really know the criteria, but they're going to trade anyway because they see the market moving. That's not what a successful trader does. And sometimes when we first start out trading, that's what we are. We just think we can shoot at anything because, oh, last week it worked. But I would say that you have to build that confidence and trust in yourselves. And trust means that you know that you're going to do the right thing. You're going to trade with integrity, I call it. Always have. You'll do the right thing at the right time. They have this expectation that markets are crazy. They're irrational at times. Actually, most of the times is what I should have written there. So these erratic moves that the market makes no longer stun them into acting recklessly. And when they, when you act recklessly, what I'm talking about, you ignore trading criteria, you move your stop, or you get paralyzed. You can't even take a trade. Instead, you'll see yourself as having choices on how you want to respond to the market. So in past webinars, I've talked about this difference between react versus respond. And react is when you're just like in lizard brain mode. You're just operating on animal instinct. And instead, we want to slow ourselves down. And that's one of the hardest things for many traders to do. I know it was really hard for me to do. Slow yourself down. Miss a trade. But come from a place of responding instead of reacting. Responding is more thoughtful. It's more introspective. It's thinking about more, how do I want to play this? Do I want to take this trade? Do I want to take 3? No, you know what? I'm going to take 1 and see what happens. They focus on identifying opportunities instead of information that stokes their fear. So there's someone who, when they look at the market, they're excited to see what develops. For instance, I have a module in the course, in the Command Your Trading course, that is titled Wake Up Excited to Trade. And the purpose of that module is to give you some sort of basis that you want to get to this place of you're excited to see what's going to happen today, either in the market or in your account. And it could be both. Ideally, it's both. So every day I come to the charts, I'm really excited. I want to know, okay, what happened overnight? Are the moves setting up to be good? Like this morning, I was really excited about the euro and the euro yen and the dollar Swiss. Those were my 3 top line trades, if you recall from the planning session. That's where I wanted to put my money this morning. And guess what? The Swiss didn't hit, and the euro yen and the euro dollar failed miserably. Even on reentries, they failed. And that's what contributed to my losses. But I look at it like, ooh, like a kid in the candy store, a kid who's waking up and it's Christmas morning. What's there for me under the tree? Whereas a lot of traders are like, oh God, I'm afraid. I don't want to lose money. I dread this. Successful traders don't have that reaction. But there's certain things that they've worked on around the fear of losing money, and they'll continue to look for opportunities. They lead with a belief in their eventual success rather than their eventual demise. So again, they come from that place of believing, and it's just not conscious belief, because a lot of this comes from your subconscious. But if you see yourself doing certain things that you say on the outside, like, I don't want to remove my stop, and you do anyway, or you hold on to a trade longer than Kim says to hold on to it after its supposed stop levels hit, then you're probably being driven by something unconscious. And you need to figure that out, because it's holding you back. So here's a quote that I said: the consistency you seek is in your mind, not in the markets. Remember, the best traders think in a number of unique ways. This is Mark Douglas's quote. And he goes on to say they've acquired a mental structure that allows them to trade without fear, while at the same time keeps them from becoming reckless and committing fear-based errors. And when he used this word, they've acquired, I would say they've acquired and built a mental structure that allows them to do these things, because it took work. It takes work to build that mental structure if you don't have it. And how do you get there, though? Let's look at some of the things he talks about. When you really believe that trading is simply a probability game, concepts like right or wrong, win or lose, no longer hold or have the same significance. Hey, welcome back. I hope you enjoyed that short segment on the best of Mark Douglas from our Wednesday webinars. I also cover our trade plan evaluations, and in those webinars, I look at what the trade plans were for that day, and then I compare them to the market movement and let you in on how I traded that right after the trade planning session. I also do members Q&A and technical training, which is kind of combined into one. So any question you have, I make sure to cover those questions in the weekly webinar. It's a little more hands-on than the planning sessions are. The planning sessions get you ready to trade the day. All right. So thanks again for listening. If you haven't heard of me, go to our website, priceactiontradersinstitute.com, and send me an email. Love to hear from you.